Imagine this. Two investors start at the same time. One keeps buying and selling, trying to make quick profits. The other does something much simpler. He buys, holds, and slowly builds. 10 years later, their results look completely different. So what did the second investor do differently? Successful real estate investors don't chase quick money. They follow long-term strategies that compound over time. Today, we're going to explore how long-term investors actually build wealth through real estate. Welcome to Decode Advanced English on Wealth by Hana House, where English meets finance, investing, and real-world thinking. In our previous lesson, we learned how investors analyze a property investment using numbers such as rental yield, expenses, and return on investment. Today, we'll look at the bigger picture. How do experienced investors build long-term wealth through real estate? To better understand this idea, let's listen to our experts, Alistair and Victoria.
Long-term success in real estate often depends on patience and strategic planning.
Indeed, many successful investors focus on building a property portfolio rather than relying on a single investment.
Diversification also plays an important role.
Quite right. Owning different types of properties can reduce risk.
Another common strategy is reinvesting profits.
Rental income from one property can be used to acquire additional properties.
Over time, this approach can significantly expand an investor's portfolio.
So, long-term investors rarely depend on just one property. They gradually build a portfolio and reinvest their income. But how does this strategy work in everyday situations? Let's listen to a conversation between Liam and Sophie.
Bank financing plays a major role in real estate investing. I always thought real estate investors just buy and sell properties.
Some do, but many investors prefer long-term strategies.
What kind of strategies?
For example, building a property portfolio.
So owning multiple properties?
Exactly. Each property can generate rental income.
And that income can help buy more properties.
Right. Another strategy is diversification.
Meaning different types of properties.
Yes. Some investors own apartments, others own commercial properties.
That sounds safer.
It reduces risk, and over time, the value of the portfolio may grow significantly.
That was a very practical example. Let's break it down. What Liam and Sophie showed us is that successful real estate investing isn't about one deal. It's about building a system over time. From this conversation, we can see three key long-term strategies. First, building a portfolio, owning multiple properties instead of relying on just one. Second, diversification, investing in different types of properties to reduce risk. And third, reinvesting, using rental income to acquire more assets over time. If you look closely, all these strategies follow the same principle. They focus on growth over time, not quick profits, and this is what separates long-term investors from short-term speculators. Now, let's decode some useful vocabulary from today's lesson. Term number 1, portfolio. Meaning, a collection of investments owned by an individual. Example, experienced investors often build a diversified property portfolio. Term number 2, diversification. Meaning, spreading investments across different assets to reduce risk. Example, many investors use diversification to manage risk. Term number 3, reinvest. Meaning, to use profits from an investment to purchase additional assets. Example, many investors reinvest rental income to expand their portfolio. Reminder word, rental yield. You may remember this term from our previous lesson about analyzing property investments. Rental yield measures the annual rental income relative to the property price. Successful real estate investors rarely focus only on short-term profits. Instead, they follow long-term strategies such as building a property portfolio, diversifying across different assets, and reinvesting profits to acquire more properties. Over time, these strategies can create significant wealth and financial stability. Real estate investing is not just about buying property. It's about building a long-term financial strategy. And for many investors, one important part of that strategy involves using bank loans to acquire property. In our next lesson, we'll explore how bank loans work in real estate investing. You've been watching Decode Advanced English on Wealth by Hana House, where English meets finance, investing, and real-world thinking. See you in the next lesson.